Well, hello friends. Hey, it's Jamie here with Reece Homes. Hope you are having a wonderful spring. We're just off of Easter weekend, and I know the last few weeks have definitely been volatile. Certainly there's a lot of discussion of global economic policy and how the United States is operating with tariffs and such. And we have been watching that very closely, understanding that real estate does take a little bit of time to adapt. But we did want to take, now that we're 2 to 3 weeks into that cycle, we wanted to talk to you a little bit about how the global economic policy is affecting things at the real estate market level. The first one is, after seeing peak rates of about 7.25% in January, we did see mortgage rates declining through much of the winter and early spring. This was a pattern that we saw last year as well, where we peaked in the early part of the year and then dropped throughout much of the year. And that was the pattern we were hoping to see, where we went from about 7.25% down to about 6.65%. But in the early April, when we saw those major tariffs announced, we did see a big spike very quickly, almost overnight, of about 0.5 point, going from 6.65 to a little over 7%. And luckily that's dropped down a little bit, and we now find ourselves at 6.94% as of April 21st, and we're very thankful for that. Certainly that's much better than what we were a year ago at 7.43%, and we do have some hope that we will, once economic policies can kind of balance out a little bit and get a bit more steady, that we should see things move a little bit more towards the mid-6s and potentially lower 6s throughout the year. Now, how have things affected our local market? Now, we've got some great new statistics out there that allow us to see almost to the minute, or at least to the day, how the market is trending. So if we compare the first 3 weeks of March to the first 3 weeks of April, here's some of the things that we see. Inventory is up by 30%, from 1.3 months to 1.7 months. That looks substantial, but seasonally that's very common. Real estate, our market activity is a bell curve, and the top of that bell curve is almost always May, June, or July. I think this year it's going to be closer to July than it is to May, because we just have seen a lot of people kind of put the brakes on things as the year has started and things have gotten a little bit more uncertain. List to sale price ratios are down from 102% to 101%. So about 1% list to sale price ratios dropped. And again, that is actually something that we see seasonally as well. And that's mainly because buyers have a few more choices this time of year than they did a month ago or 2 months ago. And then finally, the really great statistics that I think show the impact of this greater volatility or greater uncertainty that's been introduced over the past 3 weeks is that what I would call competitive indicators are down 8 to 10%. So listings with escalation addenda received are down about 8%. Pending listings with multiple offers received are down about 10%. And certainly that's impactful, right? More offers, sellers want more offers. They want escalation addenda added to those offers. But 8 to 10% is actually pretty small given the level of uncertainty and volatility that we've seen. So this gives us, this certainly gives us notice, but also doesn't really create a great deal of concern. Bottom line, when we entered this year, most economists expected that we were going to see about a 20 to 30% increase in sales and just overall activity. And now what they're looking at is maybe just holding steady with the level of activity that we saw in 2024, or seeing maybe about a 5% increase. And while, we always like to see growth in the market, 2024 really wasn't a bad market. It was just one that took a little bit of adjustment because we had been coming off of some really outstanding markets leading into that. And we still should acknowledge that in 2024, home prices appreciated. And much like this year, you're going to see plenty of opportunities for first-time home buyers, opportunities for people to move up, downsize, or even relocate. So I think overall, we're in a good position at the moment, and we're going to continue to see how things evolve with broader economic policies and how they filter down to our local market. If you have questions or you have plans that you want to take off of hold and put into action, we'd love to hear from you. Thanks for watching, and best wishes for a wonderful spring.